You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it is time to rock out once again with the option block. My name is Mark Longo. I'll be your guide for this approximate 1-hour journey through the world of options. A fun journey. You can join us live if you're able every Monday and Thursday, noon Central, 1 p.m. Eastern. That's via the old Mixler. If you can't join us live, don't worry. We still like you. Get it on the old podcast platform. Whatever one you use, we don't judge. And, of course, if you like what you hear, leave some nice comments there. Leave some nice reviews. We won't hold that against you either. And, of course, make sure you send those timely questions. Send them the usual way via the website, social media, all that good stuff, our mobile app. That's the easiest way to get some timely questions in. iTunes ain't going to do it for you, unfortunately. All right. And let's see who we got on the old all-star panel joining us today. Let's start out in the hinterlands of Chicago, where we are joined once again by Uncle Mike Tussaw from the appropriately named St. Charles Wealth Management. Uncle Mike, we're closing in on the big meetup. Are you excited, sir?
I am excited. Big night tonight.
Have you placed your orders with Skippy Zeros and Lemonade yet?
Not quite.
All right. Well, I know you've promised it to all the attendees, so you better get going. They sell out pretty quick there. I know it's a hot place. It being the one restaurant in St. Charles, you got to hit it. All right. Moving on out to who knows where this guy is. I guess we'll find out. He could be in the Option Pit World headquarters. He could be in the Costco near you. Let's find out. He is the Greasy Meatball, Mr. Mark Sebastian. Mr. Meatball, how you doing? Where are you today, sir?
I'm coming to you from our world headquarters. Although currently I'm thinking about some delicious gyro with a fresh brewed Lipton iced tea and maybe a grilled Greek salad from Skippy's Gyro. Unfortunately, the closest one to me is in Oak Brook on Butterfield Road. I don't have one just down the street from me in St. Charles.
Well, we all can't be as fortunate as to live in the Mecca, the paradise on earth that is St. Charles, Illinois. So we have to settle with being Skippy's adjacent sometimes. And I don't know if there's a Skippy's near him. I guess we'll have to find out. We're also joined, holding down the Fidelity hot seat, is Brian Isabel from the Active Trader Strategy Desk. Brian, welcome back to the program. And is there a Skippy's Gyros and Lemonade near you, sir?
So thank you very much for welcoming me back. There are no Skippy Gyros around here, but there is a large Greek population, so euros are not hard to find, just not of the Skippy's variety.
You are a lucky man, sir. Lucky man. Euro proximity you can always tell there's a huge correlation between euro proximity and high property values. It's just a given fact in the real estate world. We all know that. All right. I need to cash a check from these Skippy's guys. I'm giving them way too many plugs. Let's keep on rolling instead into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, you know the drill. Trading block, time to talk about what is trading. And today we're coming into showtime, and it's funny, VIX cash almost exactly where it was at this time last show, with about 1330, pretty much almost unched. So that means nothing's happened. So we can just all go home now. Nothing to go on. Nothing to talk about here. No, of course, I'm joking. There is some stuff to talk about. We'll get to it. Most of the major indices off slightly on the day, but not a ton today. The S&P, once again, kind of the laggard of the bunch, but to the downside. So maybe not the worst thing if you're a bull. Off a little bit more than 0.1%. We're seeing NASDAQ and Dow both flirting with the 0.2% territory to the downside out there. All right, Mr. Meatball, I know you got to run off to the Costco near you very soon. So let's start in your neck of the woods, sir. What is lighting up your tape, and what's catching the eye of the crazies in the pit chat these days?
Well, on a day like today, it makes me feel bullish, but not like we're going to rock higher bullish, but bullish like we're going to crawl higher bullish. The SPX is slightly down on the day. The VIX is down decently. The VIX futures are getting punched in the face. Everything I'm looking at from a structural standpoint says S&P is going to creep higher, I think, over the next couple of days and weeks. We're going to see something near 2,900 or higher. Every day there's some sort of we're closer to trade deal. They're going to drip those along all the way through to Thanksgiving, I think. Through Easter. And I think you're going to see the S&P maybe touch that all-time high before or right on top of it before we drop. The one thing I would notice is that VVIX is 89. Last week, this time, I think we were around 13 again. VVIX was 79.
Yeah, it was 10 handles lower, yeah.
Yeah, so it tells you that there is some option trading going on. Of note, I think you'll like this one, and we'll talk about this tomorrow on VolViews, but the biggest VIX trade of the day is there has been a size buyer of the VIX April 13 puts. They paid 16, they paid 19, then they bought the 12-13 put spread for 15. About 110,000 of those have traded today, all bought, all customer flow, all betting that volatility is going to go lower. That has been kind of the most interesting piece. I would also note that this morning, VIX was 13 and the April future was 14. Now the VIX is 13.13. The April future is 13.85. We're really finally starting to see some compression in the VIX future. I think we're likely to see the market go green and maybe potentially nicely green on the day. That's kind of the major driver that I'm seeing today and where I think kind of the story is going to be for the next few days and weeks.
Excuse me, that's interesting because we were talking about that in the last VolViews, how when it gets into the 70s, the VVIX, that's when my spidey sense starts tingling a little bit. The little hairs start sticking up in the back of the neck. You're like, we're probably going to go somewhere. And VVIX went somewhere. It went 10 handles higher, but we didn't really see that commensurate move like you kind of just mentioned, which is kind of interesting. And that maybe I think that merits some further scrutiny out there because everyone out there who likes to use VVIX as this great indicator. I mean, it is. It's one of the more useful indicators out there, I think. But there are moments like this when you get some of the compression and some of the other things going on. You're in these weird moments in the cycle where you can have decent moves in VVIX and you're not getting maybe your bang for your buck if you're playing VXX or if you're playing in the VIX or anything else like that. Like that's what you're betting on, right?
Yeah, and the interesting piece. We did see VIX go to 14.25. It made a nice move, but I think a lot of the vol driving is, as I'm watching, there is a lot of put buying, and I think the curve has significantly flattened. Upside is still, or has significantly kind of smiled, where they're buying downside and they're buying upside. We've seen kind of longer dated calls find a bid, and we've definitely seen out of the money puts find a bid as well, and that I think is unique to how VIX has behaved. Normally, the at the money options are really driving things, but what we've seen now is that the wings are moving around, and at the money has been pretty solidly stable.
That just shows you, I've said it before, but sometimes, oftentimes, particularly in the volatility space, you really have to pay attention to the construction of these products that you're tracking on a very, because people are excited, interesting to want to see VVIX move, not maybe too excited to see, getting bid up by put activity in the VIX, but that's exactly how it works. So it is doing what it's supposed to do, but maybe not what you want it to do, which is an interesting scenario, I think, for a lot of our audience. We'll get into that more, of course, tomorrow in Volatility Views. I know you got to run, Mr. Meatball. I hear you're sending poor Rock Lobster hither and yon all over the country. He's on a plane as we speak.
He is. I've sent him all. I'm sending him all over the country. He's going to be here, there, and everywhere. People are going to, instead of Carmen Sandiego, we're replacing Carmen Sandiego with a middle-aged Italian guy from Maine.
You should put a little map on the website. Where in the world is Andrew? And just have a little pin.
Where in the world is the Cyclops?
A little happy one-eyed lobster just going around the map, going to places. He's in California. He's going to be terrified. He's like, what am I doing outside of the Hindus? There's civilization here.
Except that's where he's from.
I know.
People don't realize.
I know.
Andrew and I were talking about this yesterday. What would 25-year-old Andrew say to 50-year-old Andrew? 25-year-old Andrew, surfer dude from Torrance, goes to UC Santa Cruz so he can hang out on the beach and be a banana slug, and versus 50-year-old Andrew wears flannel all day and cuts down trees and builds doors and cabinets. He watched too much Home Improvement in his youth, and he decided he wanted to be that guy. He wanted to be Tim's helper on Home Improvement. That's what he became, or the neighbor, the weird neighbor. His Spicoli became a Ron Swanson.
Yeah, pretty much. All right, so I know you got to run, sir. So if listeners are intrigued, they want to check out some of this, maybe some. I know you have some good stuff on VVIX over there. Maybe a seminar, maybe even a masterclass. Where should they go? What should they do?
Yeah, Tuesday I did a webinar on VIX spikes, VXX, and a few other things. You can go to our optionpit.com. It's right there on the front page, and you can watch me discuss kind of how the vol products work, how the space has changed, and a couple of decent trade ideas. Just go to optionpit.com, right on the front page, click on OptionPit webinar, VIX Spike VXX.
We got Studini in the chat room. I like the handle, by the way, saying rock lobsters don't like warm weather. This one does. This one's from California. So, he's just a late adopter to New England. He's not a native, born and bred New Englander like myself, who's now a Chicagoan. So it's all confusing. But again, forget all that. Check them out, optionpit.com. All right, Mr. Meatball, go forth. I think the Costco near you is having a sale. So go hit it, sir. All right, let's keep on rolling. Let's go off to the active trader strategy desk, where unfortunately they don't have a delicious year. Oh, actually, well, they do have something. They do have delicious gyros, just not Skippies. But still, a lot of things in the on your radar today, Brian. A lot of things lighting up the Fidelity tape. What are Fidelity clients? What are they slinging today, sir?
Well, there's, in addition to some of the things that we see very frequently on our top trades by Fidelity traders, Tesla, Amazon, AMD, Apple. A couple of interesting things that came out today. One was Bed Bath & Beyond. They had an earnings miss. They were down about 10% on same-store sales being down. A little bit of a disappointment there. I've seen a lot of activity there in Bed Bath & Beyond and in LYFT as well. In case anybody hasn't heard yet, but if this is the first time, apparently there is a lot of talk about a potential Uber IPO coming out, and as you may know, Uber is Lyft's biggest competitor, so that may be driving some of the activity around Lyft.
Never heard of either of them, sir. What are you talking about? What are these companies you're talking about?
Yeah, and if those are both completely new to you, then I would encourage you to start watching the news and getting out of the house a little bit more. But yeah, so a lot of trading around Lyft, probably having something to do with that potential Uber IPO. Could be any day now. One other last one I just would mention, Boeing is in the news still a lot of activity around Boeing from Fidelity traders. Oh, and one other one that just popped up that was kind of a interesting one, Viking Therapeutics. Not one that I'm super familiar with, but a lot of trading in that today. They did announce their data from a phase 2 study, so one of those biotech companies with, a big study that had some news come out, maybe driving some of the Fidelity customers to looking at trading at that.
Fidelity Customer slinging a little biotechs, getting a little fun out there. I like that. That's always biotechs make our frequent appearers, I should say, on our guests, contributors, call them what you will, on our Odd Block segment, Brian. Because go figure, a lot of weird activity going on in biotech. So interesting to see some of the Fidelity crowd playing out there. But you mentioned LYFT. It's interesting because the whole deal with the LYFT IPO, of course, was they rushed it out the door because they wanted to beat Uber to the punch, right? So they were the first ride-sharing app getting out there before the big one of Uber, and they did, and it seemed like it worked briefly. And then it seems like LYFT kind of taking it on the chin now as a result of maybe people saying, yeah, maybe not a huge fans. They don't love these companies that aren't making a ton of money. I saw some chart. Someone sent it to us. I'll see if I can dig it up for the show here. But something along the lines of 81% of the current IPOs for 2019 are companies that are losing money. Which, if you look back at that chart, is pretty much right in line with about 98, 99, the last time we saw that kind of craziness, right in the height of the dot-com bubble. So maybe a little bit of historical precedent going on there. But still, yeah, LYFT and Uber falling into that interesting exclusive club. But LYFT getting out first, and then... Oh, I'm sorry. Go ahead, Brian.
You know what I found really interesting about LYFT and Fidelity customers? It's actually it's up 2.5% today, and 63% of the orders from Fidelity customers are buys versus 37 on sells. So sort of almost contrary to what you might have thought at first blush when you heard LYFT was coming up on the orders by Fidelity customers list.
Yeah, I guess they're like, well, it's taken a beating recently, right? I mean, it's up today, but it broke the 60 handle, I think, yesterday or a couple of days ago, because it's at 61.25 now. But that's the last time we talked, the low was 66, so it has blown through its low and beyond since then. IPOing at 72, very famously got up to 88, almost 89. And since then, it's broke the 60 handle to the downside. So it's interesting how the LYFT and Uber thing are going back and forth. The rumors of Uber coming, crushing LYFT, but of course, LYFT's performance and not being so great has also spooked the Uber investors because they're talking about that IPO now going to be well below what they initially thought. So they're both kind of racing each other to the downside right now, which is kind of interesting. Speaking of LYFT, really quickly, we talked about it. It was kind of the hot IPO, the hot option on the tape. We talked last week what was going on with their first day of trading. It's been a full week now. Got a full week under our belts for LYFT. And the volume's actually pretty decent. In fact, today is pretty strong as well off this bounce. You mentioned Fidelity customers are buying the stock. Maybe they're part of this options palooza today as well. Coming into showtime, we saw 61,000 contracts on the tape already. That's probably a little bit higher now. The ADV is about 75,000. So the ADV is pretty strong. And today's volume looks like it's going to beat that already. So a lot of paper today. The big position still out there is effectively that 80 conversion reversal we talked about last week. That's about 9,000 of the 80 calls and about 7,600 of the 80 puts. So maybe some of that was taken off, which is odd. So maybe some of that wasn't all of the conversion reversal. People were slinging those puts as well. Then we go down to 85 calls. So it's all in the 80s. The top 5 are pretty much 80s, or the par calls are number 5 with 4,000 of those open. So a lot of positions that maybe after a week or so, not looking so good. Total OI, nearly 200,000 contracts out there. So it's done pretty decently for a new listing out there. The big trades today, 1,000 of the 850 puts going up for a dime. So that's on the bid. So it looks like they were a dime at 15. So it looks like maybe someone deciding to harvest a little bit of the old risk premium and maybe playing with a little bit of fire, because who knows if that 50 strike it blew through the 66 low not too long ago and through the 60 handle. So 50 strike looking a little bit more relevant than it did a week ago. And then we have a bunch of about 700 of the 870 calls going up. So a little bit of a broad spectrum. Speaking of a broad spectrum, Mr. Uncle Mike, you're always looking at a broad spectrum of things out there. Maybe a little bit of silver, a little bit of gold, a little bit of S&P. Who knows? Maybe you're looking at lobster futures. We never know. What's lighting up your tape, Uncle Mike, sir?
Not looking at the lobster futures today, but a few things of note. I noticed Apple did cross the 200 mark since our last show, and just kind of flirting with it. It seems to keep going above it and below it as we speak on this show today. Metals are going down today as of now. Silver, or SLV, is down roughly 2% on the day, so it'll be interesting to see if it can hold the 14 mark. Some other things of note, though, or what I'm really looking at this stage, is that it seems like the S&P is kind of stalled a little bit on the 2890 area. It seems like that's a pretty key point of resistance on the SPX, or around the high 288s and SPY, around that area. And so what I find interesting about that is that we had a big rally and then it just kind of stalled out for a little bit. But the other point of note for today is that, to add to what Mark had said earlier, we have a virtually flat S&P right now. I believe we're down 2 points or so, 1.5. We have commodities down, and with gold and silver being down, but we also have bonds are lower, and that TLT is down 70 cents on the day. So typically, or I shouldn't say typically, but a lot of times when that happens, the money's going to go somewhere at some stage, meaning the money's coming out of silver, of metals right now, it looks like. Money is coming out of bonds a little bit to some extent, and money's not really doing anything either way in the markets. So it'll be interesting to see whenever we have no type of, when everything's going down in some way, something's typically got to give at some point. So this is going to be an interesting market over the course of the next week or so, especially when we have a day like today. In terms of sectors, I'm seeing the financials with XLF being up 12 cents on the day. So that is a positive for the marketplace. And so when looking at the market from this perspective, I think it's important to look at everything. Why are different things doing different things? And flatness of the market, but the pullback within the commodities, and to some extent even in the bonds, definitely makes you raise an eyebrow, to say the least.
And we were just talking silver on our TWIFO show last week, I think. We had a deep dive into metals. And I said, we got to get Uncle Mike back to see what's going on with his mega 2-year explosion of activity that was his silver collar. If you can't tell, I'm being facetious there, listeners. Not exactly an explosion of activity, but if you have done some stuff, maybe we'll have to get an update one of these days, Uncle Mike. Meanwhile, Uncle Mike, keep your talking pants ready, because we're going to get to you in a little bit. First, I want to dive into some what's lighting up the rest of the tape here. Then you're going to do a rare segue, a little journey with me through the odd block. So get ready for that. But first, let's see what else is lighting up the tape out here today. Listeners, talking broad indices. So coming into showtime, we saw VIX doing pretty decent paper, closing in on 400,000 contracts, ADV a little bit north of 500,000, so 516, which is actually pretty light for VIX. Usually it's north of 600,000 at this time of year. So it's come off a bit. So again, VIX not exactly lighting up the tape, even though, and we kind of been sitting in this range for the better part of a week. But we talked about that at the top of the show, what's going on, VVIX. You want to know all that kind of stuff. Vol views tomorrow is the place to tune in. SPY, 850,000 contracts on the tape. ADV about 2.5 million. SPX, 325,000. ADV a little bit north of 1, about 1.2 million. The Qs, about 220,000 contracts on the tape. ADV a little bit shy of 700,000, about 680. And the Russell IWM with about $1.50 on the tape coming into showtime. ADV right around 360,000. Let's look at the equities really quickly as well. Equity options, I should say. Number 10, NVIDIA, 89,000. Number 9, Facebook, 91,000. Number 8, let's see. We've got, why is my chart getting all crazy here? Oh, there, that looks a little better. All right. Number 8 is U.S. Steel, of course, good old X. I love that symbol, X. It's great. U.S. Steel, 94,000. Let's see. They're off about half a buck today. It's not a huge underlying. I wonder what's going on out there. We have to dig out a little bit. U.S. Steel, 94,000. Number 8. Number 7, good old Boeing. Our neighbors across the street here, about 100,000 on the tape. Number 6, AMD, also with 100,000 on the tape. Let's just a wee bit more. Number, see, what are we at? 6 here. Netflix, 104,000 on the tape. Number 5, eBay with 134,000. Number 3, I'm sorry, Bank of America, 192,000. Number 2, Tesla, 205,000. And the number 1 spot yet again, Apple, just about 240,000 contracts on the tape. Let's look really quickly. Bank of America, once again, the most biased paper on the top 10 here, with about 80% of the paper coming on the call side of the fence. All right. Actually, no, I take that back. eBay, 85% of that paper coming on the put side of the fence, which is kind of interesting. Some interesting stuff afoot out there in eBay as well. Spoiler alert, I think we're going to talk about that. So let's get to it with a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. Uncle Mike, welcome to the Odd Block. Sir, do you remember how all this works?
I think so. I'll do my best.
All right, we'll see. We'll fight along. First off, I'm going to ask you, Uncle Mike, to put aside, I know you're a very diligent contributor to this program, so you read all the notes before the show goes out. So I'm going to ask you to put that aside for a second and just use your brain, use your gut. I'm going to ask you right now, if you had to guess, you had to say to yourself, what are the top options positions that are open right now, the size positions in Tesla? What would you say to yourself?
Well, unfortunately, I already have looked at them.
I knew you were diligent. All right. Your diligence working against me this time, but it's okay. We can roll with that. But you're right. It is fascinating to kind of see what's going on out there. Because people were asking us, and of course, we had a long dialogue for the better part of over a year of those mystery puts out in Tesla around the par level. There were the Jan par puts and the Jan 50 puts, of course, which were the 50 puts are the ones that first caught our eye because there was enormous OI there. And people have been asking us since then, what's up with the mystery puts? Most of them, all of them pretty much. A lot of them went away in this January. Are they back? What's the deal? Well, pretty much in a nutshell, if you're asking yourself, are the Tesla mystery puts out there? Are they back? Are they there for size? The answer is yes. I'm looking here right now, the top 10 positions in Tesla right now, the top 5. So the top 5 positions in Tesla can all fall into that mystery put category. They're either far out of the money or they're far out of the money and far out. A little bit of both. The number one still, Uncle Mike, the Tesla April par puts. Isn't that crazy? 63,000 of those are open right now. So these are going out in a week. You have 1 week.
That's mind-boggling.
You have 1 week for Tesla to drop, 170 handles, something like that, 160 odd handles. I'll have to see where it is right now. But yeah, 167 handles it needs to drop, Uncle Mike. Granted, if it gets a little close to that, these will be looking all right. But still, a week to go. I mean, we saw the other ones. They were all a year out, 8-10 months out, 2 years out. A week? I don't know if I can get behind that. And then number 2, Uncle Mike, is 50,000 roughly of the 50 puts, also in April. So between the number 1 and number 2 positions, you have over 100,000, about 113,000 contracts open of the par puts and the 50 puts in April. So 113,000 contracts that, barring some sort of a cataclysm in the next week, are going to go out worthless. So yeah, people got back to this trade in a hurry, and they did it. They weren't playing around this time. They weren't going out to Jan or beyond Jan 2021. They were going to April. And unfortunately for them, because they got some crazy stuff, Musk fighting with the SEC, issues with production downgrades, but nowhere near enough to make all this happen. Let's just round out the rest of the top 5 for you, listeners. Number 3 are the Jan par puts with about 37,000 of those. So as far as mystery puts go, a little bit more reasonable. They got a little bit more time. Then we go out to number 4, which are the Jan 50 puts with 34,000 of those. And then rounding them out, our old friend, Uncle Mike, this is probably your favorite on the list here. About nearly 30,000 of the Jan 10 puts. Remember the old 10 strike got a lot of love back in the day. The 10 puts are back. So yes, the top 5 in Tesla, top open positions, all of Tesla, mystery puts. So there you go. Total of about 1.8 million out there. You got to go all the way down to number 6, listeners, to find a quote-unquote relevant put position, and that's the April 260 puts, which are near out-of-the-money puts right now. Those are a lot more relevant. Then you go out to June, and it's the June par puts again, and then number 8 is the June 50 puts, and then number 9, the Jan 20 puts. So this just keeps going. You could keep doing this month after month, strike after strike, all through the top 20 probably. So yeah, a lot of love for funky downside. Total outstanding right now in Tesla, 1.8 million contracts, 1.25 million of that on the put side, and a good chunk of it in those mystery puts. So bear that in mind when you're out there slinging yourself some Tesla. All right, let's go on to some paper from today, Uncle Mike. We were just talking about this. We were just talking about good old eBay lighting up the top 10 for most actives. Let's see what the heck is going on out there. eBay right now, ticker symbol eBay, EBAY, off about $1.50 or nearly 4%. They're trading about 36.25 right now. This is a name that over the past year has had an interesting range. Exactly a year ago, they were trading a little bit north of where they are right now, but just shy of 40, so about $3 north of where they are right now. And then they kind of have vacillated over the course of the last year, mostly drifting to the downside, hitting their nadir of around 26. Guess when? Christmas Eve, before they bounced back about 10 handles since then. So it's been a nice rebound for eBay as well. Looks like today's paper maybe not exactly feeling that love going forward. Let's see. We caught 16,578 of the April. These are weeklies. These are expiring. These are expiring tomorrow. 36 half puts. So these are now in the money puts. So it looks like we got some expiration playing going on. Going up for not quite 15 cents, 14.8 cents. Obviously getting some funky prices on splits because that print went up, but a bunch more went up. A total of over 32,000 going up today. These are the 12th. So these are expiring tomorrow. So let's see, 15 cents. So these are already in the money. So this guy's doing all right. I wouldn't be surprised if maybe he's closed. Maybe some of these later prints are closing. But this initial print, at least, was opening. So interesting stuff. Looks like Uncle Mike, I don't think this is really your usual game over there for your clients, but it seems like someone wants to play fast and loose with some fire here around expirations. First off, what are your thoughts on eBay? Are you buying a lot of stuff on eBay? Are you selling on eBay? Are you a big eBay guy? And then B, what do you think, more importantly, about this crazy close to expiration put play this guy's got going on?
Well, a couple of things. First off, is it legal to do anything online besides Amazon? I didn't know that it was.
Not in the U.S., but you can do it overseas, yes. Everything else is banned.
Oh, okay. Got it. Of course. Yeah, so I'm typically more of an Amazon person than eBay person. I mean, it's a neat company. It has a lot of neat things for it. But with that, I think it's one of two things, Mark, like what you had said. It's someone that's just really trying to play with fire right before the expiration. And for whatever reason, they believe that maybe eBay has the ability to go down rather quickly from some type of technical indicator or something along those lines. And of course, the other side of the trade would be someone might be looking at this and saying, you know what, I'd like to buy eBay at this price anyway, and I might as well get paid to do it. So maybe I can just sell it in this fashion. So that is always a possibility. But I think that this is likely just someone that's on the side of the trade that's looking to play with fire, I would think. Of course, as everything, you never know. And then the other thing that might hold true to this is maybe someone holds a lot, and not a little, I mean a lot of long stock in eBay, just needs a quick hedge for whatever reason to maybe free up some margin maintenance, to do some other things with it. There's always that possibility. But ultimately, if I were to be a betting man or a guessing man at this game, I think someone's out there trying to play with some fire.
Yeah, we used to see these guys walk into the pits right around expiration. There's some guys that only, at least back in the day, used to only play. All right, that was the time they would come to play because they liked it, because it was that crazy fire period. It's a rough way to make a living. You got to have some stern internal fortitude, shall we say, because these things can go all over the place. It's not quite a casino, but it's pretty darn close in the options world to doing that, because you're at the whim of just the vagaries and vicissitudes of the stock at that point. In this case, it's working out all right. It's about a dime to the good or so if he's gotten out. I'm guessing maybe some of that latter prints, maybe he closed them. Maybe he took his roughly 8 or 10 cents and got the heck out of Dodge. In which case, I say fair play to you, sir. But it's a hard way. It's a rough way. It's a dangerous way to make a dime. And I used to see these guys, these are the guys who were chomping on the Tums and sweating like mad right as expiration, as the clock ticked away, because you got all that gamma going crazy, everything else going crazy, just watching that clock, watching the stock ticker. It was not my preferred way to make a dime, shall we say. But this guy, maybe it worked out for him. More power to him. But I don't know if I would urge anyone in our audience to rush out and emulate this guy. Let's see, moving on here. JetBlue, been a lot of stuff going on in the airlines of late, a lot of with the discount carriers. Southwest getting hit a lot lately, of course, with the Boeing issues. Our friends across the street here causing problems for all the airlines. Southwest not amongst them. JetBlue looks like having some interesting stuff going on today as well. JetBlue, of course, ticker symbol JBLU, trading today about 17 and a quarter, up about a third of a buck or so, nearly 2%. Looking at a one-year chart of JetBlue, this is kind of a crazy chart. Looks like it's multiple mountain peaks. It shoots up, then it shoots back down, then it shoots up, then it shoots back down, and it did it about 4 times over the course of last year. Exactly a year ago, it was trading about 1930s, about $2 north of where it is, and then it kind of peaked out in the near term, right around 20, then shot back down to about 17, then gap right back up over the course of like a month and change, back up to about 20 again in September, then sold off again, this time pretty hard and pretty fast, this time down to shy of 16, then shot back up to about 19 and a half, almost 20 again in November, then shot back down, guess when, Christmas Eve, to about 15, almost breaking the 15 handle, and then kind of shot back up again to about 18 and change. So it's kind of just been a series of jagged mountain peaks. Maybe Brian or technicians over there have some thoughts about that. I don't know, but I'm not the most chart heavy guy. But interesting looking chart here, to say the least. Let's see what paper caught our eye today. It was the June 17th. June 17 calls going up 11,828 times for 95 cents on the bid this time. There were 95 cents at $1.05. This is all opening. Usually our paper is opening in the odd block, listener. So if I forget to say that, you can usually surmise that it is opening. Well, if that's closing, I'll tell you, because that's part of the analysis, right? 11,000, almost 12,000 of these calls going up on the bid for 95 cents. Over on MyX, everybody's over there on MyX. There's earnings there. Let's see. Of course, there's earnings. It's June, so it's going to be about at least one cycle. It's on the 23rd of April, so coming up pretty soon. So you got, looks like, harvesting of the old call premium. And it's interesting, Uncle Mike, you look at this chart here. This stock is not exactly shy for gapping up. And it'll gap up to about this level, not too far away, actually north of this level. He sold the 17s, so he's out at around $18 with the call premium. And this stock has gapped up to almost 20, multiple times over the course of the last year. So, Uncle Mike, what are your thoughts here on, first off, the construction of it, going out roughly 3 months, 2-3 months for upside covered call, if that's your preferred time frame, if you like a little bit closer, a little bit farther out. And then B, doing it on a stock like this, which has had some spikes in the last year.
Well, I think as a covered call writer, you have to have the mentality that if the stock gaps up above where you sell the call, that you're fine with that, because it's going to happen at some point. And when it does that, you've made the maximum amount that you possibly can on the trade upon expiration, of course. You really need to have the mentality that a covered call is one trade, meaning that when you see the stock go up beyond your strike price, that it's not a bad thing, it's actually a good thing. Of course, you're feeling like, I should have just held onto the stock. Well, that's life, and there's ways to work around that, like the call spread, which I've talked about on this show a bunch of times. But ultimately, that's kind of where you need to be with it. In terms of the time frame, I typically prefer probably 2 to 6 weeks whenever I'm writing calls. But there are times that I would go out further. Usually, when I do go out further, though, I'm doing some type of a collar or something where I'm planning on holding the stock for a longer period of time, and the only purpose for the covered call would be to finance the long put. But this is an interesting play in that it's someone who wants to get some income. Decent rate of return on this, but with all that being said, he has to be okay with the stock gapping up to the 20 level again, which it easily could do. Of course, if it doesn't, the premium's his to keep or hers to keep, depending on what gender the covered call writer is. And with all that being said, I think if you like this stock, it could make a lot of sense.
Could indeed. Let's see if our last name here can make any sense. Remember, Oprah loves herself some Weight Watchers. Apparently, some other people do today as well. Our last name today, Weight Watchers International, ticker symbol WTW. Looks like the market not loving it today, though. Off 2 1/3 handles are a little over 11%, 2 down to about 18 1/4. Who knows? Maybe Oprah dumped her stake. Over the past year, this thing looks like kind of like those peaks we saw in the other chart, but only one of them, and spread out over the course of an entire year. So a much slower peak. A year ago, it was trading 62. So this thing has had quite the move to the downside. And then it gapped up as high as over 105 and change. So maybe some of that, the Oprah lift, looks like a lot of that back in July of last year. And then ever since that peak, it's kind of been down the other side of the mountain there, and ever so inexorably to the downside, selling 50s, 40s, 30s, and now down to 18, 19. Wow. How the mighty have fallen here since, remember those heady days they were on the odd block. Oprah was loving it. Everyone was buying calls and Weight Watchers. It was the place to be. Apparently, not so much anymore. Let's see here. What do we see today? Our Eye of Sauron found for us the May 20th. So it looks like there was some call love still going up. Maybe at this point, it's so beaten up, it's kind of hard to blame them. 5,584 of the May 20s going up, lifting the offer for $1.45. They were $1.30 at $1.45 when this went up. Opening paper over there on BZX, the old BZ. I forget which exchange that is that has that. There's so many, 16 now, listeners. So it's hard to keep track of all the Phillies, the CBOs, the Amex, the Arcas. Those are easy. Once you get to like the third iteration of Exchange Y, you kind of lose track of what the symbols are. Let's see. Actually, there's more going up. Total volume over 10,000 today on this strike. So someone really likes themselves the May 20s here, which is kind of interesting. So, seeing this chart, if this guy was coming out and aggressively overriding these, I might say, well, this thing's been beaten up. I'm not sure if you're going to get a lot of juice for it or if it's even worth doing it from a chart perspective. But the other way, I can maybe see a bit of a flyer. It is pretty close. It's May, so this thing's got to turn around. It's got to turn around pretty hard for this $1.45, roughly $1.50 to pay off 10,000 times. That's asking maybe a lot for this stock. That's been pretty much had one trajectory for the better part of the last nearly year, has been downward, for it to suddenly reverse and to do so pretty hard. I mean, it was looking good. It was over the 20 handle until today. So it was up there. Maybe not so much. This guy obviously thinking maybe it's a little bit overdone. Uncle Mike, what do you think about some out of the money call love and a name that's been pretty beaten up, but doing it fairly richly and doing it for, pretty close to expiration? You only got really like a month and a couple of weeks.
He's pulling for that gamma, by gosh. I think that if you're very confident, the neat thing about buying an at-the-money call is that as the market moves your way, your delta increases. So it's like buying more stock at no additional risk as the market's going in your favor. So that's something that's very exciting about doing that trade. Of course, the bad part of it is that you have the time decay. So gamma yay, theta nay.
Look at you rhyming in my odd block, sir. What have you done with Uncle Mike? Bring him back. But I know you like your out-of-the-money paper.
Regular Dr. Seuss.
Yeah, you are. I know you like your out-of-the-money paper. Do you do it usually with around a month? Is that a time frame you like?
I typically prefer to go 3 to 4 months out and then be out of it 1 to 2 months out. I think that just there's just too many times through the years that I've just wanted something to move and it just hasn't moved on time. And there's something psychologically, I'm okay losing if the stock is against me or and a lot of times in my case, the ETF is against me. But if I lose because of time decay, that's something that I do have power over and that I can get out of it at a sooner point. Of course, you don't have control over volatility, but the time decay aspect of it, that's one of the few things that we can control as traders. So I typically like being a little bit further out personally.
How did I know you would say that? It's like I've been doing the show with you for a while or something. I like to illuminate that kind of stuff for our listeners who maybe are wondering that, if that's your preferred time frame. Spoiler alert, nope, it's not. And you're right. We could have some control over our exposure to time decay. So why give it to yourself? This guy's got $1.50 worth of decay coming at him. Unless he does something about that. So interesting stuff. Speaking of interesting stuff, let's see if you guys have interesting stuff in store for us. It's time for our Thursday edition of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, let's see what you guys have in store for us today. Let's start. By the way, keep voting over there. We've extended the broker madness. You guys loved it so much. You wanted more time for the final round, so we gave it to you. So the final matchup, Fidelity fought hard, made it all the way to the Final Four. Very impressive. Well done to you and the team over there, Brian. You guys should all take a nice clap on the shoulder. Our final battle is last year's returning champ, Tastyworks, against TD Ameritrade. Get in there and make the votes happen. It closes at the end of the week, so you got another day and change to make your voices heard. I'll have to go look maybe for an early update on how things are going out there. Meanwhile, though, let's see what you guys have in store for us. Let's start here. Zach Mainpa. I apologize if I'm butchering that. It's an interesting spelling. He says, hi. Hello. A long-time listener, first-time questioner. If you've covered it already, can you point me to where in case I have missed it? But what is going on at the May 15 monthly strike in COTY, C-O-T-Y? Daily size opening transactions for 2 weeks now. Trying to figure out what they are trying to do here. Sorry if you received this message more than once. I kept clicking submit on the website. So yeah, he's having some web issues. It's okay. We don't hold it against you, Zach. Many thanks. There is the share purchase offer, but that's at 11.65, not way up at the 15 strike. So COTY, we haven't talked about COTY in a little while. Was an odd block player for a while there. Let's pull it up and see how he's doing. COTY right now at about 11.14, so a little bit shy of that offer price he mentioned there of 11.65. Let's see, not really a lot going on of late. It's been around that level, as you might expect for a name with a corporate action. Let's pull up what he's talking about. Let's see what he's looking at here. I'm looking at the top open interest positions for COTY. And he is correct. There is some size. When he first said this, my first inclinations were maybe some size out of the money paper that was directional. Maybe they think this name's going to be in play, which is always a possibility in M&A. And the second, probably more likely one, is it's probably some sort of conversion reversal arb going on a strike where they just see these things are getting a little bit juicy, and so they're taking advantage of that. Of course, talked about that before with LYFT as well, buying call, selling put, or vice versa. Doing it against stock is effectively a rates play, or in this case, it's more of a chance, or these cases, a chance to capture some sort of distortion. Usually it's a rates play. This time it's really a chance to capture some sort of distortion, what's going on. And looking here, that seems to be what's going on here as well. The 15 calls and the 15 puts are both size open for about 850,000 contracts. When you see that kind of stuff, listeners, and you see it same size, both the calls and the puts going up, then you know it's probably that type of ARB play going up. I haven't looked and seen what actually is printing, but that's my first guess. Let me look here and pull up some of the top trades. Oh yeah, today's top trades. May 15 calls, May 15 puts going up for 4.25 on the puts, 6 cents on the calls. So buying and selling, do that for $4.19. Knock it off to $15. Do some quick math, listeners. That means they're doing it for roughly the stock for about $10.81. And it looks like they did it against 400,000 shares of the stock for $11.17. So they did that whole conversion reversal for 36 cents. That's pretty rich for a 1 month and change in a $11 equity. So you can probably see why this is going up so many times. It's just a straight up, kind of these deals cause discrepancies. These guys are taking advantage of it through conversions. And it's not the most exciting, not the sexiest paper. That's why we don't usually talk about it. You see it a lot of times in names like IPO names, where the puts are bid up or crazy, or people want to get short, so they're buying the puts because the stock is short restricted. So they use the puts to do that. It causes all sorts of crazy bids that to go up where these puts are, the conversion reversals are getting out of whack. People will come in and put them back in line. They'll do it for size. And that seems to be what's going on out here. And I'll have to dig a little more at some of the other trades. But look, today's prints and the OI, that's kind of my analysis of what's going on there. Brian, you must get a lot of calls like this at the strategy desk. Weird print size going up in XYZ, and it's usually some sort of maybe a div play, or maybe in this case some sort of merger arb with conversion reversals. Is it hard to break these things down for people in the way that they can kind of intelligently understand them?
Yeah, well, part of the problem is you don't really truly know 100% what someone's intentions are, right? I mean, you can make some pretty educated guesses, but they're still at the end of the day guesses. Anytime I hear something like this, my radar or my antenna goes up, and I start thinking exactly like you just said. Is there some sort of M&A activity? Is someone trying to arb away something? That's usually what you end up seeing, or you end up thinking it could be, but you don't really truly ever know, because is it opening? Is it closing? Is there another part of this that we don't see? Is there long stock, short stock that's being done somewhere else? Are all these really part of the same trade? Or are they a bunch of different people piling on? Is it, so you never really truly know, but you can make some inferences from what you see. And oftentimes it's what you just said, right? First thing I'll do is look and see, is there some sort of corporate action going on? And if I see that, then I'm going to think that it probably doesn't have to, but probably has something to do with that and someone trying to arb away some sort of a discrepancy out there.
Yeah, because at your first blush, people say, tons of the calls going up. This guy thinks the deal's not going to happen. But then you see also the puts are going up. And then you see, if you do a little digging, you see the stock's going up. And you can kind of put the math together. And he's just trading one synthetic for another and getting a pretty decent rate to do it. And so that's pretty much probably why you're seeing all that paper going up. Let's see here. I know, Brian, I like when you guys come on because you always have some sort of fun questions going up from the Fidelity crowd this week. Let's see what we got from the Fidelity client. We have to have some sort of like Fidelity question of the week. I kind of like that. It has a nice ring to it. He's saying, well, this Fidelity customer is asking, I'm thinking about selling covered calls on a stock that my father left to me, and I don't want to sell the shares. Is this a good way to get some extra income? This is kind of like what Uncle Mike was touching on before, Brian. People get a little touchy about selling covered calls on stock that they don't want to sell. What do you advocate in those scenarios?
You know, it's funny, when Mike was saying that earlier, I was actually writing down a note of thinking, oh, this goes exactly to the question that we got from the Fidelity customer. What really stood out about this particular question to me is the fact that they're talking about shares that they inherited from their father. So usually there's some sort of attachment to something like that, right? It's like, oh, my dad passed these down to me. They probably have some sort of an emotional attachment. Maybe not, but oftentimes they do. But he does explicitly say, I don't want to sell the shares. So whenever I hear those words, I tell people, then don't sell covered calls. Because if you absolutely, positively do not want to sell those specific shares, don't sell covered calls, because you cannot eliminate. You can lessen the risk of being assigned, but you can't eliminate it just due to the fact that you've sold the call. Even if it's way out of the money, maybe if it's, not a dividend payer and it's far out of the money and it's far till expiration, have you lessened the likelihood that you're going to get assigned? Sure. But have you eliminated it? No. So with that type of situation, I would tell the person that if they absolutely don't want to get rid of those shares, it doesn't make any sense to sell a covered call against it. And to Mike's point earlier, you won when you get your shares called away, right? You should go into covered calls with, hey, I reached max gain. I got assigned. My shares got taken away. Woohoo, good for me. I won. But if you're going to, at the end of the day, have your shares taken away and lament and be sad and sometimes, sure, it just keeps going up after your shares get taken away, and it feels like, of course. But something like this, where especially if you have some sort of emotional attachment to it, it's not a good idea to sell calls against it. And yeah, you might take in some extra income, but at what cost ultimately?
Yeah, the cost to your soul. But usually we get these questions. Usually it's a tax thing. It's not usually an emotional attachment. That puts an extra little layer of intrigue to it. But you're right. Mike, it's kind of interesting, because we get variations on this theme all the time. And 99 times out of 100, people are happy, when their stock is, because that means they're right. But there are these people who don't want to sell it. And there are things you could do, but it sounds like, I don't know if this you got to be a little bit on the savvier end of the spectrum. You got to babysit it. You got to be willing to roll, maybe do verticals instead, things like that. There are things you can do if you don't want to get called away, but it requires a little bit more diligence maybe than this guy is willing to do. Maybe he should call a guy like you, Uncle Mike, who can maybe roll his calls for him. What do you think?
I would love to roll some calls. But just to add to what we're saying on this situation, one point of note, whenever you do inherit shares, I never claim to be a tax expert, but you have the step up. So let's say that your father bought the shares when they were $5 a share, and when you inherit them, they're at $35 a share the day that your father passed away. If that's the case, your basis on them is $35 a share, typically. And of course, talk to a tax accountant before making any decisions along these lines. But the thing to keep in mind is that if you want the shares because you like the stock, then by all means keep it. But if you have the stock just because your dad had it and you want to make dad proud, well, I hate to be blunt, but dad's not with us anymore. And you need to make the right financial decision for yourself, not based on the way dad would have wanted it to be. Money is something that does not have emotions. And so if it's a stock that you like because of your analysis, you feel it's a good stock, hey, great, hang on to the stock. But if it's a stock that you're like, well, I kind of like it, but, maybe I could I really like this stock better, but I want to honor my father. I really don't think that's a good idea personally. I think you should really do what's best for your own personal financial situation. And in terms of selling covered calls on them, just once again echo it. If you want to keep the stock, you should not sell covered calls on it.
Yeah, it's emotions and money never mix well. And this is yet another example of that. All right, let's keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's go around the block. Let's do it. And let's see what's come up. By the way, we've been talking about earnings a lot. We just kind of finished the tail end of the last season. It's perfect time to go right back into another one. What do you think? Because it's coming up. We got tomorrow's one of the big kind of kickoff days. If you like financials, a lot of big ones popping off tomorrow. We got Bank of America next week, but tomorrow we got JP Morgan and Wells Fargo popping off. Let's see. I think they're before the bell. Let me just look really quickly. Yes, before the bell. You got JP Morgan Chase. We got Wells Fargo, PNC, as well as First Republic Bank. So no shortage of some financials. Got more coming next week. So financials kind of leading the dance these days, which makes sense given what's going on in the market going on out there. So a lot of things to keep an eye on. The earnings front coming back again, which is nice. So if you're tired of the endless saga that is macro, a little bit of micro to sink your teeth into. Let's go around the horn. Brian, we'll start with you, sir. What is on your radar for the rest of the week?
Yeah, nice segue there. Back to the macro. I'm going to be just watching those headlines. I mean, of course, like you said, bank earnings, those are all coming up tomorrow and then some more next week. So definitely going to be looking out for those. But the standard topics that we've been talking about for the past weeks, China trade tariffs, Euro trade tariffs, all those big questions out there, Brexit, and just keep watching the horizon to see what's coming down the pike from that macro perspective.
I'm just curious, anecdotally, you guys are fielding calls all the time on the strategy desk. You guys, do you notice an uptick like the height of earnings season? Are people hitting you up around like the big days, the Googles, the Amazons? Are they calling a lot more, or is it not a non-factor for kind of call volume for you guys?
No, we definitely get more volume around. There's two times in particular when I think our desk in particular gets a lot of phone call upticks, and one is around earnings of the big companies that a lot of people trade, and when there's a big downtick in the market because now all of a sudden everybody wants to talk about hedging. So those two situations we do see a pickup in volume.
That's true. I'm sure there's a high correlation between your call volume and, the inverse to the VIX, right? VIX spikes. Or actually, with the VIX. Yeah. VIX spikes, your call volume goes up. There you go. So interesting stuff over there. And Uncle Mike, sir, you got some earnings coming up. You got some macro. Maybe you got some precious metals. What's on your radar, sir?
Well, I'm looking at, I think that in addition to what we had just talked about, in addition to what we had just talked about, I think that the 2,900 mark on the SPX is important. And then after that, the next stop will be all-time highs if we're looking to the upside to see where resistance may be. So I think we have macro, we have micro, and we have technical.
All of the above. All of the fun stuff you could possibly ask for in a week ahead, listeners. Unfortunately, when it comes to fun stuff, it's over, at least for this show. If you're listening live, go get a beverage, cup of coffee, nice bathroom break, maybe a quick lunch, because we'll be back in about exactly 30 minutes. You like equities and indices and volatility? Spoiler alert, we're going to be doing a deep dive into that on TWIFO. So stay tuned for that coming up about 30 minutes. If you're listening live, you got the tabs open on your browser. Just keep it open. It'll play the next show as soon as we start to listen in some other ways. Maybe via the Mixler app or things like that. You may have to reopen it. I apologize for that. I didn't build the app. But we have to reconfigure in here a little bit for some in-person guests and things. So we'll be back in about 30 minutes. But before we go, let's go. By the way, listen on podcast. Just check the next show. It'll be right there waiting for you. All right, but before we go, let's go back around the horn. You mentioned the meatball already, all the fun stuff at Option Pit. Play along. Look at that map on the website. Find where the rock lobster is today. He's going all over the place, which is unusual for him. And Mr. Brian, sir, listeners are liking what you guys are saying, and judging by your record finish this year in the Broker Madness, it seems like that is the case. They want to learn more, and maybe they want to open up an account. Maybe they want to call you guys directly at the strategy desk. Where should they go? What should they do, sir?
They can go to fidelity.com/options if they want to take a look online, if they're not a customer, and take a look at Fidelity's options platform and suite. Of course, they can always give a call to Fidelity, 1-800-566-4444. And they can always ask to speak to the trading strategy desk if they are a Fidelity customer, and we'll be more than happy to help with any questions that they have.
Can they call up and say, I want to talk to Brian? I want to talk to that guy on the show. Can they talk to you directly?
They can if I'm not on the show.
Yeah, if you're not on the show. So don't call them now. Wait, give them another 2 minutes, listeners, and then you can call them up. Hit them up. And if you want to learn more about all what's going on over there in the land of options at Fidelity, they made it pretty easy for you. Fidelity.com/options. I don't know how much easier it could be. It's all there. The rates, the commissions, the tools, all the cool stuff if you want to check it out. Kick the tires, light the fires. Tell them we sent you. They'll be happy to hear that. And then let's go back around the horn. Uncle Mike, I want some delicious Skippy Zeros and lemonade. Maybe I want to talk some options too. And I'm in the Chicagoland area. Where should I go? What should I do?
303 East Main, St. Charles, Illinois. Tonight, one night only, at my office, St. Charles Investment Club. Would love to have you. If for some reason you're a last-second listener, stop on by. We are going to be talking about some options tonight.
Yes. Check it out. Check it out. You can go to stcharleswealth.com. Wealth management, I should say. stcharleswealth.com, correct?
Yes, sir.
There you go. stcharleswealth.com to learn more. Click on the Fox. Maybe you win yourself a delicious Skippy Zeros and lemonade. You never know what's going to happen out there. All right. And on behalf of Uncle Mike and Brian and the rest of the Trading Strategy Desk team and the Rock Lobster and the Meatball, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, all the fun stuff you do, sending in questions. Keep them coming. We love to hear from you, asking questions, listening live. If you're listening live, take a break. We'll be back in about 28 minutes. Otherwise, we'll see you back here next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.